Welcome back, everyone. We are now concluding our break, and we will begin with our panel discussion. We are going to turn to our focus area that you are challenged with every day: financial crimes. As we've heard throughout the presentations, bad actors, they're everywhere. Criminals and terrorists are exploiting vulnerabilities in the financial system to facilitate their criminal activities, including drug trafficking, but also human trafficking. I'd like to move into introducing some of our foremost authorities on financial fraud and money laundering, and they will discuss areas of fintech, financial crimes, and the regulatory landscape. To begin, I will introduce and turn things over to our moderator, Holly Philippi, Partner, Director, Governance, Risk, and Compliance on my far left. Holly has over 18 plus years experience in data regulatory compliance and risk management, having managed several top banks around the globe and engaged directly with their anti-money laundering compliance teams and heads of AML compliance. Next, we have Dennis Lormel. Dennis is retired, as I mentioned before, from the Federal Bureau of Investigations after a distinguished career spanning 30 years, where he served as the chief of the FBI's Financial Crimes Program. He established and directed the FBI's comprehensive terrorist financing initiative following the September 11th terrorist attacks, which evolved into a formal section within the Counterterrorism Division known as the Terrorist Financing Operations Section. Additionally, Dennis has received numerous commendations and awards, including the Central Intelligence Agency's George H.W. Bush Award for Excellence in Counterterrorism. Many of you know Dennis as a frequent speaker and expert as a part of his tireless involvement with the Association of Certified Anti-Money Laundering Specialists, or ACAMS for short. James Cummins is also here, Executive Vice President and Director of BSA, AML, and Corporate Compliance at TCF National Bank. I just said a lot of acronyms there, where he specializes in complex BSA and terrorist financing investigations and brings more than 25 years of criminal and financial experience, including being a retired police commander with previous assignments in SWAT, narcotics, and investigations. James is a founding executive board member of the Greater Twin Cities ACAMS chapter and is a frequent national speaker on today's topics, highlighting unique expertise at both the international and regional levels. He also serves on the board of the Minnesota Chief of Police Foundation. Rounding out the discussion is Mr. Peter Vincent. Prior to joining Thomson Reuters Special Services, Peter was the principal legal advisor for the U.S. Department of Homeland Security and ICE, where he led the largest legal program in DHS, supervising over 1,000 trial and transactional attorneys and an additional 450 legal and mission support specialists in 60 offices around the country. Peter advised numerous operational enforcement components within DHS and ICE on a wide variety of sensitive, high-profile law enforcement and national security issues, and is an internationally recognized expert on El Chapo and his criminal enterprise, as well as the Colombian and Mexican drug cartels and their money laundering efforts. Peter is frequently asked to provide expert commentary on 60 Minutes, CNN, MSNBC, the Science and History channels, and many other media organizations. As you can see, we have a very distinguished panel up here, and it is my pleasure to welcome Holly, Dennis, James, and Peter.
Thank you. After that introduction, we could probably just tell stories about our experiences so far. That could be rather interesting. So we're going to hit on 3 topics today. Fintech in the financial industry. Certainly we've heard a lot about that already today. And then we'll talk about financial crime trends, what we're seeing as trends today, and some new things that we're seeing. And then also we'll get to the regulatory landscape. So certainly 3 topics that we could probably spend an hour on each one of them at least. So we're gonna push that into about 50 minutes. But we also understand that we are between you and happy hour, so we will make sure to watch that clock. So we're gonna jump in and get started. We will, I think all of us will be around after the panel, so feel free, any questions that you guys have, certainly come up to us afterwards. A lot of great expertise sitting here on this panel, so pick their brain while you've got them here. So we're gonna start off with fintech, right? So I think fintech seems like a buzzword, I would say. I think it's kind of been real buzzword, and everyone's a fintech, right, that we hear. But I think there's a couple stats that I found fascinating, so I'm gonna talk to those a little bit. So it says, it's grown, so the industry has grown from 1.8 billion to 15 billion in 5 years. So I would say the buzzword isn't just a buzzword. It's actually happening and changing the landscape that we live in today. In 2015, the estimated worth was $4.7 trillion that's attributed to fintech. So I think where, at least for me, right, it seemed like a little bit of a buzzword, and you were starting to see all these new little fintechs pop up, and they pop up every day. But now we're seeing it's significant, and it's changing the way that we do business. So as we talk through that, let's look at it from a financial institution's perspective. I think the fintech curve, right, and things that are happening on fintech is starting to force traditional financial institutions to change the way that they're looking at their AML programs, but also just the way they're innovating themselves. So I'll throw that to Dennis. Are you seeing the same thing?
Well, I'm seeing a lot of apprehension for one thing.
Yes.
Certainly change is difficult for people to accept and bridge in that. I spoke last week at a town hall meeting with Capital One Bank, and there was a lot of concern about that. So I think we need to really embrace this idea and embrace what it can do for us, because the way I look at it is I look at fintech as a tool that can help us. I think the wild card in the game are the regulators. Yeah. And certainly, and James, I'd like to defer to him on this for a second, because we were talking before, and not to put him on the spot, but we were talking before at lunch about this and the regulatory expectations, because one of the things I've seen is the ability to use analytics, and fintech brings that to the table so well for investigative purposes and for more proactive initiatives. And then the problem is the regulatory expectation. And one of the things I've seen with the regulators, and not to be throwing rocks at the regulators, but is a lack of leadership in not coming out and saying what their expectations are, so they leave it to the institutions to try to determine or to surmise what the expectations of the regulators are.
Yep. So James, to put you on the spot,
right.
I'll do it.
Right.
So you're living in that world every day, right? So how are you thinking of it for your financial institutions?
So a couple of different ways. The fintech in general, it's causing financial institutions to look at the customer engagement, customer experience very, very differently. And when I think about fintech, I think about the ease of non-traditional banking that's created. So I'm part of a mid-bank peer group, and in total, we have about $1 trillion in asset size of all the mid-banks in the country. And when you look at your top 4, that's half of, or less than half of every one of them. What a lot of those mid-sized banks prize themselves on is being nimble and being able to react to customer expectation. With fintech and this new digital environment, that's a very different scenario. And that means a different ground-up approach for many of those size institutions, from big data and zone zero data lakes, and creating and laying over Hadoop over the top of that to extract that data and utilize it for purposes that are appropriate for your bank to be able to deliver those services. That fundamentally has to occur before you can even start addressing where you are within the industry to compete with some of this new technology that's out there. And so it's very, very costly. It needs to be an entire business model change for a financial institution who isn't currently operating in that environment. And more what it has done is it has forced the industry to take a look at banking services in a very, very different way, and what those expectations are today and what they're going to be in days to come. I think when you get to the regulators, what's very difficult is if it's difficult for us to keep pace, it's even more difficult for them to keep pace. And we've seen how difficult it is to modify regulation, let alone implement it. I mean, we waited for the CDD rule for years and years and years. And even then, that was intended, beneficial ownership, for example, was intended to be a state government responsibility and ultimately ended on the banks. So we have to take control of that in our own environment, and I think that's the greatest challenge, and then dictate to the regulators that we've done so in an effective manner.
Yeah.
Just to go back, if we can, just for a second on, from a practical operational standpoint, I see a lot of value here because one of the things we need to do, we are an inherently reactive industry, and we need to be more proactive. And the more we can do to be proactive, certainly the more we can do to disrupt terrorist funding, transnational criminal groups and all types of criminal organizations. So I like the opportunities that present themselves to be more proactive. And I know we were talking about this also, you've got your baseline transaction monitoring. And one of the things that I like to look at is how do we build on that and look at specific crime problems and then use this technology on those specific crime problems. And I think human trafficking is the best example.
Yeah.
A few years ago, there was a great case study that J.P. Morgan Chase worked with Homeland Security Investigations, and you might have still been there, Peter, at the time. That was a tremendous operation where the analysts from the banks actually sat with analysts from Homeland Security Investigations. And these are the scenarios we see. These are the patterns of activity. And what they did is they built specialized monitoring, targeted monitoring is what I call it, specifically to those scenarios. And their hit rate was tremendous. And if you fast forward in Minneapolis in January, I think you guys might have even been a sponsor when ACAMS had the event up there. And they had an event that focused on human trafficking. And they had a special between, again, I think at this time it was U.S. Bank with Jim Dinkins and his group, and the U.S. Attorney's Office up there, and they've had phenomenal results in a very short time. And I think that's the type of things, from a law enforcement perspective, we want to see more of. And that's the kind of thing we want to see the regulators come in and try to help us identify, what the expectation should be.
Yeah. So one thing you mentioned, James, is you're having to take a look at it a little bit differently, right? So how can the fintechs help, right, with what you're doing today? Certainly take advantage of that, make things faster. But are you seeing that you're starting to look at it from an innovation standpoint, or looking at it from an acquisition standpoint, or bringing those fintechs into your organization to do that? How are you looking at adoption?
You're seeing it in almost every one of those instances. You're seeing partnerships between fintechs and traditional institutions. You're seeing people build a lot of technology in-house and develop that. What's going to happen is a shortage in the industry of subject matter experts to be able to do that, however, and I think we're seeing that already. So, and it's very, very costly to do that. And then through acquisition, those are definitely three different ways to do that, but all ways that are being addressed today. We've elected to do it in-house. We did build a pretty substantial technology division and department, and with that, same thing with the CDD rule. To do this effectively, what we found across the entire organization, including all 7 business line segments that we have, and there's others in the room with hundreds, in order to do that, we needed to build our own risk ranking technology because there wasn't something effective enough in the marketplace that we felt addressed the needs and met the regulation. And again, it's that pace and speed with which we're living now within a digital environment and a immediate expectation or responsiveness that has driven some of that. And that also gives us the capability to be much more dynamic, much more nimble in the way we approach different trends or patterns of activity that are occurring. We can modify the system very easily internally rather than customization and reliance on a vendor in order to do some of that, and we can be very responsive to things that are occurring in the industry.
So So it's interesting. So you're choosing to build it in-house. Makes sense. But you're starting from a very different perspective than we see some of the fintechs starting, right? Fintechs are starting from the technology side. I know technology, I can build the technology. You have, I don't know if I'd call it luxury, but where you're starting understanding what the regulations are and that you have to have some things in place to make sure that you're meeting those regulatory guidance. What I think we've seen as a trend in fintechs, at least early on, was we've got a lot of technology and we're going to use it, but they didn't necessarily think about the compliance aspect of it. So lots of transaction. We talked about Coinbase earlier, right? I think I set up my Coinbase account in about 5 minutes. I did it because I wanted to be trendy. Bitcoin's not doing so well. But it's, are you seeing that now some of those fintechs that didn't necessarily think about it from a compliance perspective are starting to shift and now understand that there are AML guidance, regulatory scrutiny that's eventually going to come down, right, that they will have to comply with?
It's very slow. And by that, I mean, I had a conversation last week with our director of our consumer division, and I had to reinforce, we still have to ask some things up front. We have to know these people. We have to understand who they are and how they intend on utilizing the account. And what he wants instead is the ally experience where you push a button and basically your account's open. And that's the frankness and the speed with which we want. So although I have them where I need them to be now, that's internally, and you can imagine then on an external space, as this is being addressed, how much more slowly that is going to take place in those conversations.
About a year ago, ACAM started a working group with fintechs, and they've got some people that are engaged with ACAMs on their advisory board and in other capacities who have led that, and they've had these discussions, and there's still, there's no real clear vision on where they're going with this yet.
Yeah. So it's interesting. I've had a couple of discussions with some of the fintechs and the Coinbases of the world, and I'm starting to see that they are starting to think about it, but because there's no direct regulatory guidance for them right now, they don't see it as something that they're required to do today, right? They'll think about it, but what I've seen is they think about it in the lowest denominator instance, right? Okay, so what you're saying is I can run all the transactions against OFAC and I'm fine, right? So do you see regulatory changes coming that will force that to speed up anytime soon?
Not quickly enough.
Yeah.
Because it's creating an incredible competitive disadvantage until the rest of the institutions that have not transitioned to a digital and a true, very effective customer experience platform can compete. And it's driving a lot of institutions to look at their business model and what that is today, and brick and mortar and application-based solutions to something very different.
I think I read an article that said that financial institutions look to lose about 24% to fintechs, just based off of the speed that it's coming through. Yep. So I'm gonna. I know we've got certain topics, so I'm trying to keep it at. So we're gonna jump topics to one that I think is rather interesting as well, although I'm passionate about fintechs. Financial crimes. So I think, Dennis, we had a conversation early on, and you said, look, there's lots of financial crime happening, some new trends, et cetera, some new things that would fall underneath the category of financial crime. But at the end of the day, right, any criminal activity comes back to money. So all crime essentially comes back, and it's a financial crime.
Right, and I do a lot of training, so one of the things that I talk about, if you take different crime problems, other than maybe murder or a real true violent crime, there's a financial component to every one of those crimes. And so if you just stack everything up and you put money laundering on the bottom and fraud on the top, drug trafficking, counterfeiting, whatever's in there, kidnapping and everything else, there's going to be an element of fraud, and there's going to be an element of money laundering, and particularly when you're dealing with enterprises and organizations, it'll be more so. So One of the things that we always tried to do, and one of the things that I encourage my former counterparts in law enforcement to do, is look for those elements where we can track the money and where we can go after the fraud and prove the fraud violations, which in a lot of cases are going to be a lot easier. And and I'll bring Peter in, because you certainly are a prosecutor, and you can appreciate when you want to build the enterprise type of cases and the different latitude then you're going to have with the different crime problems.
Yeah, I'll just riff a bit on what both James and Dennis, and actually Holly, have said as well. I think there exists to this day a pernicious and consistent misconception that terrorist organizations or transnational criminal organizations are run by sort of knuckle-dragging mouth breathers. And that, in fact, is not at all the case. Part of the problem that the legitimate financial industry and law enforcement, whether it be federal or state, local, or tribal, face is that the adversary is, unfortunately, and in many cases tragically, incredibly sophisticated and savvy. And unlike law enforcement or legitimate financial institutions and organizations, these individuals do not have to abide by any rules or regulations or terms of use or national boundaries or frontiers. In fact, they are exceedingly adept at exploiting gaps and seams and weaknesses and holes in that global legal and counterterrorism infrastructure. And Dennis pointed out something that I think is incredibly important, and that is we, the good guys, and all of you, the really good guys, and especially good-looking guys, in Godlewski's case, are already on your back foot because the adversary is able to move massive amounts of money and power in a way that is awfully difficult to keep pace with when you're trying to legitimately follow the rules. And I've seen this over and over again with transnational criminal organizations like the FARC that relatively recently signed a peace agreement with the government of Colombia, or the Sinaloa Cartel, infamous because of Chapo Guzman and his malevolent brilliance, is that they are able to hire legitimately the best and brightest, whether it be bankers or accountants from France or the United States, or those tunnel engineers from Germany that were able to build tunnels under the southwestern border of the United States to incredibly high-grade commercial standards, or Russian engineers that build semi-submersibles, the so-called narco submarines in the jungles of the Pacific coast of Colombia. And they're able to evade, through legitimate financial institutions, taxes and restrictions on that movement of money. And so I think being able to be more proactive and to be able to move quickly, to James's point, we are always too slow. And that is a real challenge. There, unfortunately, still exists this idea that all of us, because most of us have college degrees or we've lived in sophisticated cities, are somehow smarter or more agile and quick than the bad guys. In fact, that isn't, as I started off saying, that's exactly the opposite. And I think we do all of ourselves an injustice and our communities a great disservice by treating these folks, as I said, mouth breathers, because they're not. They've got the muscle. Those guys are legitimately mouth breathers. Unfortunately, they're usually pretty heavily armed. And trying to see around the proverbial corner as to where the next effort is going to be focused to evade the sorts of restrictions that we have here in the United States or across the globe is a real challenge. And whether it's dope or people or weapons, they're often using the same networks, right? And I could not agree with Dennis more. Follow the money. I mean, people do crazy things for love too, but people do really, really crazy things for money. And that's what you've got to really focus on, because ultimately that will lead you, in most cases, to the particular network nodes that you really want to focus on to get more bang for your buck.
Just a couple of points to kind of bounce off of that is, if you go back and you look at after 9/11, Al-Qaeda, everybody looked at Al-Qaeda like what they were, a terrorist organization, and you see people in caves, and you get this vision of people who are just fighters and things. Yeah. They had a chief financial officer, And that man was brilliant. And we went after him for a few years, very hard. But what we got to look at is when you look at these organizations, don't look at them like a terrorist organization. You've got to look at them as a corporation. And you have to figure out, and going back to the other point you were making, Peter, is what's their business model? And so what are their revenue streams and what are the flows? Because you made a tremendous point, the convergence between criminal organizations and terrorist groups. They use the same channels, they use the same couriers, and the people in the middle who facilitate for both criminal organizations and terrorist organizations, they don't care because they know that they're getting paid, and that's the only thing they care about. And they couldn't care about the politics, they couldn't care about the drug trafficking, they couldn't care about whatever the terrorist activities are. All they care about is keeping that channel open. And so what we saw along the way is you've got facilitators who are regional, facilitators who are super regional, and then you've got facilitators who are more global, and we would call them the super facilitators, and we would try to go after them and target them, but you have to be real careful because when you target those, do you want to really take that node out at that point in time, especially when you're able to start to understand the flows and things, and you dealt with that more so in terms of the legal aspects and some of the other considerations about at what point do we go in and take those folks out. But it's so important to understand, and we've got to look at these entities like that and the fact that they are very much more proactive, and the ability to be proactive and the ability to circumvent controls, and there's no denying the fact that they operate in places like Afghanistan and other places where there's a lack of governance and there's a high level of corruption and chaos, so that they can operate with impunity in those areas. And so it's important for us to be able to come up with those proactive strategies where we can disrupt those funding streams to the extent we can.
Yeah, no, if I could just jump in, the multinational corporation is a perfect example. So much so that the major organizations are engaging in corporate social welfare, going all the way back to Pablo Escobar and the Medellin Cartel. He was building in parts of Medellin and Antioquia state schools and hospitals. Hezbollah, Lebanon-based, Iranian-backed, builds hospitals and builds schools in areas that are underserved by the governments. And so they're not only able to move currency and people, they're able to essentially buy folks' loyalty and protection because they're providing a very valuable service. They're putting people's kids through school. They're giving scholarships to universities. And so they have adopted the corporate social networking that's so important to multinational corporations around the world. And the more we start seeing them in that way, I think the better we are able to combat them.
Just going back to your original question about the fraud and the money laundering, I look at it, you got to look at what the crime problems are and the criminal activities and the predicate offenses, and then look at what are the facilitation tools, like the correspondent banking, like wire transfers and things like that. I testified before Congress in October of 2001, and I was asked to testify about the biggest vulnerabilities in the financial services industry. And I said, basically, beneficial ownership shell companies was a huge problem. Correspondent banks were a huge problem. Wire transfers were a huge problem. But they aren't necessarily the crime problems. They're the facilitation tools. If I testified today, I would say the two biggest problems are fraud and money laundering.
Yep.
Another big factor that, and I agree with everything that was said, but another big factor that we're seeing as a trend that's really disturbing to me are the lone wolf scenarios, and it's very, very different. There are no money movement in the majority of those cases. For those of you that are following, in Minneapolis right now, there was a significant arson on a college campus, and that woman was radicalized, and there was no money movement at all, but there was a social and online presence with vocalized radicalized ideations, and then in addition to that, there was some travel, and she was actually rejected across multiple borders. Those are the other circumstances that are becoming more and more prevalent as we're looking towards different sympathizers that are domestic here, and talking to a lot of law enforcement, those are also items that are of great concern because it's not as outwardly telling, and there is no money to follow from a transactional perspective. So that's one that personally troubles me quite a lot as well.
You know, on that note, you know, with the lone wolves, the way I looked at the money flow with terrorism anyway is that you've got 3 levels or 3 funding streams, and it's from money that goes to an organization from whatever sources, be it their criminal activity, and you mentioned Hezbollah, and I look at Hezbollah as not only one of the most dangerous terrorist organizations in the world, but the best organized crime family in the world because they have the best infrastructure. And so you got to look at that. But you know, you look at the funding flows. So you got money that goes to an organization, from the organization through their financial, whether it's a treasury group or a chief financial officer, it gets designated and the money flows down to support operations, and then the money flows to support operatives. And that's where the lower and the least amount of money is. At the first level, it takes tremendous bandwidth because you can talk about just a couple of dollars and you can talk about millions of dollars that go through there. But James just brought up a great point, because now we're seeing a reverse flow, is that these lone wolves, they're not getting the money from the organizations because they're not necessarily members of the organizations, but they're kind of recruited and they're inspired. Yep. And so they fund themselves, and that makes it that much more challenging for the people in James's position and your positions out there. How do you identify that? And it's not until after an attack takes place, when that person's identified and you're running them through your system, and you know, God forbid, there you see some transactional activity, and his activity was legitimate income that from his job or from whatever the source of funds was, but nonetheless, that's so important that you report that at that point in time.
One of the
I
other
think that's
things
where you start to take a look at that social profile
Yes.
that Jennifer was talking about earlier. All of those pieces play a role, right, in that identification. And to your point, Peter, right, these guys are sophisticated, and technology is making it even more sophisticated. We just talked about blockchain. You know, it originally was for the dark web to transact for criminals, right? So, I mean, that's technology that I wasn't able to wrap my head around. And here we are, we have criminals running millions of dollars through it.
Point of privilege, just to tell a very short anecdote, which just makes me giggle. I don't often smile, let alone giggle. But, you know, the Sinaloa Cartel, Chapo Guzman's in the news. Hopefully he'll be tried just down the street here or across the water. He was able to hire just incredibly savvy people. They said bankers, individuals able to launder his money. He was able to work with the Colombians who worked with botanists who were able to get 4 harvests of the cocaine leaves every year and get the highest rate of opium out of the poppies in the so-called Golden Triangle. Very, very sophisticated people. But as I said earlier, you follow the money, but you also love will make you do stupid things. You may remember that Chapo fell in love with, I guess I do mean this as a criticism, of sort of B actress who did sort of this telenovela in Mexico. And he exchanged a number of text messages. And then Sean Penn got involved. You remember he wanted to do a biopic on the life and times of Chapo Guzman. So Chapo hired extraordinarily sophisticated technologists as well, right, who would sweep rooms where the guy was on the run, right? He escaped from the 2 hardest prisons in Mexico twice, right? And he hired these technologists, and he was very, very savvy. He did not trust iPhones. He only trusted BlackBerry for a couple of reasons. One, BlackBerry is a Canadian company, and he was deathly afraid, and rightfully so, of the US domination of satellites, both government and commercial. And so he thought, well, I'm going to go with a Canadian company, less satellites. And BlackBerry, remember when President Obama came into office, he got a specially encrypted BlackBerry, which was widely publicized. So he thought, I'm going to use BlackBerry. And he, again, had very smart people around him. So when he was texting and setting up lots of very sophisticated business transactions, he was using BlackBerry Messenger. And he was communicating with Kate Del Castillo, and at some points through an intermediary with Sean Penn. And then you saw, of course, those videos of Sean Penn and Kate Del Castillo going through airports, right? What one of the richest men in the world, Chapo Guzman, did not realize is that BlackBerry Messenger, as you know, is not end-to-end encrypted, right? It's scrambled, which means that there's a global cryptographic key that law enforcement can get by going to the Royal Canadian Mounted Police and getting a judicial order, a warrant to go to BlackBerry in Waterton, Canada, and say, we want to watch what's going on because we have the probable cause that there's criminal activity going on or will be going on or has gone on, and they could turn that global cryptographic key. It's just a very long snippet of code, and they can watch all interaction, right? I hope this is no secret to anyone. And they can get back to historical. At around the same time that Chapo Guzman broke out of jail in this incredible escape by having his people tunnel underground, BlackBerry was introducing something called BlackBerry Protect, right? For $8 a month, $8 a month, you could get true end-to-end encrypted. No global cryptographic key existed. So if law enforcement went to the Royal Canadian Mounted Police and said, on our behalf, would you please approach BlackBerry Company and in your country? And they would say, we don't have it. This is not what we have. There is no global cryptographic key. It is true end-to-end encrypted. So something like Signal, right, which I hope you all use on a regular basis because it's true end-to-end encrypted. To save $8 a month, he used BlackBerry Messenger, which is ultimately what allowed law enforcement in the United States, Canada, Mexico, and Colombia to figure out, triangulate ultimately where he was. So even smart people with a lot of money sometimes do stupid things to save a little bit of money, and that we all hope happens on a regular basis because it makes our jobs somewhat easier.
You know, you make up, there's like 3 great points there that go on. First of all, communications and finance are the biggest vulnerability for criminals and for terrorists. And I've got a great drinking story, and we're coming close to drinking time.
Yeah,
so anybody wants to have a drink.
16 minutes, there's a good story coming.
Yeah, I used to go to the White House every Wednesday, and there was a story. We gave encrypted phones to Al-Qaeda at one point in time, and I'll save the rest of the story for later.
That's called a tease, by the way.
No, but you know, we're talking, and our focus has been, and rightfully so to a large degree, on organized crime, drugs, and transnational criminal groups and terrorists. But we need to look at the veteran white-collar criminals. And I hate to use the term, but I use it too frequently. The really good bad guys. And what I should say is the really proficient bad guys who know the system, you know, in terms of the corporate frauds, the Ponzi schemes, and to me, one of the biggest problems, and I think one of the biggest challenges for people in the AML arena is identifying people like myself who retire from government. If you track me and you look at my customer profile, I banked in your bank for 30 years, and every 2 weeks I got a government paycheck. Every so often I would get maybe a bonus check. Every so often I would get a travel voucher or something. But you have my profile. I retire one day, and off I go to become a consultant. Now I have just whatever money I'm making plus my retirement, and trying to determine now what my profile is. What happens if I went off the reservation and I decided to become a fraudster? You know, geez, I put a lot of these guys in jail. So now I know exactly how to do this. And so I set up a nice scenario. Maybe I open up 5 or 6 bank accounts and you see 1/6 of my information or my activity, and I go on. But how do you deal with that change in profile over time? And I see that more and more where at given points in time, somebody gets into a case of embezzlement because they've been in a position of trust for a long time, and they abuse that trust, and they're able to carry these criminal activities out. And I think that's something that that flies under the radar big time, is that type of activity.
I'm interested to see how many people are going to pull your name up as soon as they get back to work. I think your transactions are about to get looked at.
Oh.
So.
Well, I flagged myself at the bank anyway. My bank was. They've gone more away from the tellers, because I would go into the teller, you know, and it would seem to be a training bank, and the teller would have the scripted questions, and it's like I'd come in one week with either a lot of cash or checks, and you're depositing them, and then they're looking at the account and they see wires coming into the account. So what is it you do? You know, I teach people like you how to catch money launderers.
So we talked about being proactive, right? Try to figure out how can we get to the point where we can be proactive, because I think, I forget who said it, we're almost always a step behind, right? So So what trends are you seeing, James, right now that maybe we weren't seeing even 6 months ago or a year ago?
Well, there's been a couple of shifts. Certainly the online profile and the way different organizations are actually raising money or moving money. For example, within our bank, in a lot of the groups that we identified, we used to be able to do a lot of link analysis through our terrorist financing investigations, and you would see a lot of transfers, person to person to person to person, and then a loan for $500,000 to build a new building. That's virtually gone completely away, and we're not seeing that at all anymore. However, what we have seen is a tremendous spike in unclaimed funds at our airport, our international airport, to the tune of almost $100 million in 1 year. So what we've seen is the adaptability of the group to move to bulk cash smuggling away from transactional behavior because their accounts are being de-risked, they're being exited from institutions, and they need to find different ways to adapt to it. One of the other ways, and it goes to a lot of what the comments are by Peter and Dennis here, are truly around organized crime collaboration. And the marijuana industry in the United States has created an incredible opportunity for cartel to move into, not necessarily move into, they were here, but expand presence domestically. And we're seeing a lot more shift of shell companies and different entities being opened and operated that are solely for the purpose of illicitly moving money and leveraging the opportunity from the legalization in many of the states. And then we're not seeing the border transactions anymore. You're not seeing the cash deposited in Minnesota and withdrawn in Arizona. You're seeing it Minnesota to Colorado, and then you're seeing U.S. mail for $8. And so it's being shipped all around the country via UPS, U.S. mail, and every other aspect. So those are definitely shifts. We continue to see the utilization of both child care and adult care services, in particular for fraud schemes that ultimately go to known individuals or entities that have been in the periphery of terrorist financing investigations. So those continue to be trends. But the technology and the movement and the adaptability is something we're very frequently seeing.
And I think also trade-based money laundering, there's a lot of growth in trade-based money laundering, and I think that's for a few reasons. One reason is, we've been talking about the crime problem, but it goes to the fact that the financial institutions really do a good job for the most part when it comes to their AML programs. And so a lot of these folks, I look at financial institutions as either being a facilitation tool or a detection mechanism. And so they're concerned about that detection. The bad guys, they want to get away with that money, and they don't want to get caught. And a good alternative is trade-based money laundering. The increase in free trade zones around the world makes trade-based money laundering a lot easier. The fact that a lot of what you're doing is automated, almost everything. And you guys, everything is more and more automated. In trade, that's not the case. It's still very paper-centric.
Yep.
So you think about that and how much easier it is. So I see a large continuing flow to the trade-based money laundering.
Peter, what are you seeing as new trends?
I agree that these individuals are, as I've said, sophisticated and savvy, and they're very adroit and they're nimble and quick. When we used to bring prosecutors and agents into Bogota, where I worked at the embassy for 2.5 years, we go through, and even though they had, in some cases, official, in many cases, diplomatic passports, they still had to go through this process. They said, why are we sending our bags through these x-ray machines? Is it because they're worried about bombs? I said, the FARC lives here in Colombia, man. They got all the bombs you can imagine. No, I said, is it weapons? I said, you're talking to the FARC's 20,000 people. They've got all weapons. I said, well, what are they looking for? I said, they're looking for bundles of cash, bro. They're looking for euros and dollars, shrink wrap, coming back from the country. Because in the United States, we've gotten very good, thanks to all of you in no small part, on detecting anomalies. So they were forced to send bulks of cash back to their places of residence in order to literally dig holes and put them in holes there, build them into walls, which they literally did, called caletas, or put them in the financial institutions down there. So it's like trying to capture mercury, and they are very savvy. The trade-based money laundering, completely agree with that. It can be such a sophisticated scheme, so obfuscated, that without sounding pessimistic, but being very, very realistic, it is incredibly hard to detect, and I don't want to say impossible to stop, but nearly impossible to stop. And these organizations, like any good corporation, understands that they will lose a certain percentage, right? That's a cost of doing business for them, and it's a small cost for them. If you figure we're only capturing, for instance, in terms of raw dope, coke, heroin, fentanyl coming to the country, we're getting about 20%. That means that other 80% is in our systems and killing our neighbors and friends, and in some cases, tragically, our family members. So it's very similar. We're capturing a small percentage of the illegal transactions where the vast majority are actually going into the system. So that's the challenge. Again, I don't want to sound pessimistic, but I think it just requires us to try to adapt as quickly as the bad guys in order to figure out where they're going next and how they're going to go about doing it. And we use that through informants. We try to hire smart people and experienced people. But because, unfortunately, as I said earlier, we have to follow rules and regulations because that's what civilized people in democracies do, we're always going to be a step behind. So we have to work smarter.
And that goes back to the technology piece. So as you're tuning and testing systems, developing rules, and you're generating more and more and more, you have to have the ability to do it, and you're not going to get 10,000 people to do it.
Yep.
So you have to rely and transition. And what does that mean? So for a lot of companies, it's been AI and robotics and real-time API calls and looking for trigger events that will generate an alert, and then a person will look at it. And in order for us to get effective and look at more, we need the capability to do so, but not necessarily physically, unfortunately. And that, again, requires some sophistication, data integrity, and data quality. And so that, I think, is where you will see a lot of additional institutions trending in that direction.
Just wait one more comment on the vulnerabilities of the bad guys for a second. I mentioned communications and finance are the two biggest vulnerabilities, but greed is also a vulnerability. Mm-hmm. And you dealt it with El Chapo and others, but what I've found is that regardless of how brilliant a criminal might be, or how proficient they've been, is over time, greed blinds their focus. And when that focus gets blinded and they get distracted, that used to be my best friend in law enforcement, because that's when I knew I had somebody. Yep.
So we've got about 5 minutes left, so I'm going to jump to our favorite topic, regulations. So I think there was a lot of anticipation with the new administration that there'd be a lot more lift maybe in regulations. I don't think we've seen any of that really come to fruition in a lot of places. So where do you, and I'll ask each one of you to give us an idea, where do you see regulations going for in 2018, 2019?
Well, I'll start. I don't see things going very far right now, at least from an AML perspective, but what I see is a lot of motion on the Hill in Congress. There are any number of committees that are holding hearings, and there's actually draft legislation on 3 or 4 or 5 different things. And I don't see that getting much traction in this Congress or the next. But if we have a catastrophic terrorism attack like we had at 9/11, we'll see a new Patriot Act or an enhancement to the Patriot Act. And it's not going to be, and one of the misnomers and the reason I bring that up is one of the misnomers after 9/11 when the Patriot Act was passed was that was a knee-jerk reaction, and Congress just came out with all that legislation. A lot of that legislation was the way it is now on the Hill, in different forms, in different committees, in the minds of different people. And I can see if we have a catastrophic attack, we're going to have new regulation in a heartbeat, and it's going to be shaped around some of the things that we've got. So there's a couple of things that scare me about that, is that the right stakeholders aren't involved in the discussion to the extent they need to be. And the two main stakeholders that need to be engaged in those conversations are law enforcement and financial institutions. And I see groups like the Clearinghouse, which has a lot to say about it, and they represent some of the larger banks, but they don't, in my view, they don't represent across the board the people that they should, and they contend that they represent law enforcement, but they really don't. And so I testified before the Senate Banking Committee in January, and I specifically said that you need to have the two big stakeholders in the discussion, who are law enforcement and the banks, and you need to include them in wherever you're going.
And I concur with all of that. I really do. I think there'll be some efforts. I think there is very significant pushback. There's a lot of election consideration from crossing aisle. And I mentioned it in previous calls and internal discussions. Nobody wants to be seen as weakening the BSA or AML programs. But the majority of that regulation did originate out of tragedy. So are we waiting for the next tragedy to see something significant move? And that's really the viewpoint, unfortunately, of a lot of people. There needs to be a lot of things that need to be streamlined for us to become more effective. And I haven't seen that in any of the proposals that have come to light so far.
I would defer to Dennis and James. They really are the experts in this. I will say that from a general 30,000-foot perspective, I worry that the current well-intentioned philosophy towards deregulation will have unintended consequences in this area, and that the very savvy, sophisticated bad guys will look to exploit that and will frankly succeed. There are a lot of, I think, duplicative and unnecessary regulations generally that make it harder to do business in this country. But again, I worry that the spirit that is well-intentioned will go too far, and that they will unnecessarily create very, very exploitable gaps that will be leveraged by the bad guys.
A few years ago, when Senator Levin was still in the Senate, he held hearings on HSBC. And HSBC, they seem to come out of those hearings not getting whacked as bad as they should have. And I sat through the hearings, and the arrogance of some of those business people was incredible. And they openly testified to that and joked about it almost. And then the OCC got up there to testify, and excuse my French, but they got the shit kicked out of them. You would think that they were the bad guys. And what I saw as a result of that was OCC getting more heavy-handed in their examinations, because I was involved with a major bank, and I had a unique engagement. And the OCC, and this was shortly after those hearings, and I had to brief the OCC on my findings, and the OCC was out for blood against this bank, and I didn't give them the finding they wanted. And even there, that they were still very heavy-handed over that thing. So my point on that is, if we see some type of hearings and one of the regulators is up there and they get pounded, which isn't unusual, then you can look for some heavy-handed reaction to that.
So we're up on time. So I'd like to thank you all for being here. And on the panel, and thank you everyone for braving the weather to come out and spend the day with us. Any questions? I think we've got some time for some questions. Got a few. Oh, got one.
So we've prearranged this. All of the tough questions are coming over here.
No.
Yeah.
Thank you. Very interesting talk. Thank you. So one of you, I think it was James, you mentioned the inability to cultivate 10,000 heads to assist in the efforts. I notice lack of good talent pool. What are you expecting given what you talked about, right? So we're talking about a shift not only in what your efforts are from the corporate and senior level positions, but those that are entering the field today, okay? Talk about the community at John Jay College of Criminal Justice that's, striving to change themselves. What do you expect from the current and future talent pools in order to facilitate what it is that you're trying to do?
I'm really, really glad you asked this question. So we experienced the exact same thing. And what I did is I went to our MINSCU program, which is our state colleges and university program. And there wasn't readily available an education program that really cultivated people with the technology background, the investigative background, the intuitiveness, in order to be able to develop people that we felt were most effective at these roles. And what we did was sat down with deans, and we created a curriculum that's being rolled out this year throughout that college and university program in order to cultivate. And one of the other things we're doing, and we worked with all of the area banks who also have significant presence where we are, so Wells, US Bank, Ameriprise, RBC, TCF, and we really partnered to dedicate internships and available partnership throughout that exploration. We expect that to be very helpful because we're seeing the very thing that you're talking about. What we ended up doing, and we're lowest on the totem pole there, so what happened is I'd train everybody for a year or two, and then US Bank and Wells would all offer more money and take them. And that's what happened
Took
for a
advantage of your
very
talent.
long time, right? Now what I'm trying to do is level the playing field a little bit so we all have a balanced talent pool to draw from, certainly directly out of school, to try and help bridge that gap.
My question's for the entire panel. Which is the greater threat, a terrorist organization or a rogue state?
What was
Rogue state.
I think you can't make a distinction between the two. I think there are times when terrorist organizations are certainly going to be more problematic. With the saber rattling with North Korea and Iran, you really can't. In fact, there are sometimes you'd think Russia's a rogue state. So, I mean, you can't dismiss that. But at the same token, the Islamic State was a huge problem when they wanted to have a caliphate. They wanted to go well beyond the Syria and Iraq. They wanted to get into Israel and places. And you got Hezbollah sitting right there. Hezbollah is still an incredible threat, less of a threat to us in the United States. But every so often, if you listen to the news, the Israelis are bombing across the border into Syria because Hezbollah is there, and Hezbollah has one hand behind the back of the Syrians, but their full target is toward Israel. And so, you look at that, and who's behind that? Iran. So in that vein, I think it's the combination of the two that is very problematic.
I would say both, and as we all know, many rogue states use as proxies terrorist organizations or transnational criminal organizations very effectively.
Yeah, I think that's a good comment because this was the first year that I followed I look at the State Department reports, the report on terrorism and the threats every year, and this is the first year that I can recall that they actually named Iran as a proxy or using Hezbollah and some other organizations as proxies, and they basically got called out in that report.
Funny that the gentleman in the front just mentioned it. I'm actually a student from John Jay College, and I'll be graduating now in May. I'm actually trying to break into the field of AML, and that's the career that I want to follow. I wanted to ask you, what would be your advice for someone breaking into the field now, since I know the time is different from 2008. We are heading in a different direction. What would be your advice for someone heading into the field at this moment?
It's pretty interesting and I don't know if this comes from my law enforcement background or not, but I don't ask a lot of fundamental AML or BSA questions during my interviews. I'm looking for individual behavior patterns is what I'm looking for. And I'm looking for a depth and breadth of knowledge across multiple disciplines. And people who can demonstrate that to me very frequently have performed very, very well in the industry. So I see a lot of people focusing on, I need to know the 3 stages of money laundering, and I need to really get down the CTR threshold, and I need to figure all this out coming into an interview. What I've found is having a very candid conversation and being knowledgeable about multiple topics and current events have really identified best candidates for me. And then keep persistent with it. My nephew has worked he interned with my organization, and then he worked for a neighboring bank for several years, and it was exactly that, being persistent and know what you want to do, and having a sense of purpose behind that. For me, I am doing what I'm doing. Law enforcement was taken from me. I was injured pretty severely. And whatever I do, I have to have a sense of purpose to it, and this gave me that higher sense of purpose. And I look for people with like-mindedness along those lines, and that comes across very clearly in those interviews and consults that we have. Networking at events like you're doing right now is also really critical. So
I was going to
that's
say
helpful.
networking. Yeah.
I was
Yes.
gonna bring that up too, that joining ACAMs and other associations and getting involved in the local chapters and doing as much networking as possible and meeting as enough people where you're gaining a little visibility and you're able to kind of establish some credibility.
There's a lot of local chapters that are starting to do job fairs and working with the universities now. So certainly that's one avenue, is to work with your local chapter for ACAMs. Other questions? I think we had one over here. I recall the hand.
It's a quick question. It's almost drink time.
Yeah, I know. I see everyone.
So the quick
getting ready to
question
leave.
is, in today's session, no one with respect to traditional banks and fiat currency, sort of the old world, but it's still here, talked about the role of legal entity identifiers in the work of AML KYC. And I was sort of surprised by that. Does anybody have any comments on that?
So, well, that's interesting. I've presented quite a bit around the topic about identification of legal entities and beneficial owners around that space. And I'm struggling with where it is in a centralized and focused capability of a reliable source of information. You know, the reality around that, much like crypto, is that we're chasing, and until we have some form of framework to work within, I think we'll continue to be doing that, at least in my personal opinion.
Yeah, just the issue of beneficial ownership, just touching on that for a second, is that we need to have some sort of central repository for beneficial ownership. The secretaries of state aren't going to let that happen, or they've been reluctant to allow that to happen. And I advocated for law enforcement on the Hill for a couple of years, and what resonated to me was the very first senior staffer I went to applauded the fact that, yeah, that's a great idea, and it's probably the right idea, and it needs to be at the Secretary of State level that they do that. But we do a lot of nothing up here, or how did he put it? He goes, a lot of, that would take a lot of effort, and we do a lot of nothing. And that was from a senior staffer, and here you are a number of years later with the same issues. And the problem is the representatives won't vote against the secretaries of state. The secretaries of state aren't going to be in favor of that The closest we've come to a good case scenario is the last iteration I think the Treasury Department was working on. FinCEN would wind up being the repository, because before that they were saying the IRS already collects ownership information, so they should be the natural repository. And as Peter and I would both know, neither of us were IRS agents, so we wouldn't have access to that information because we'd have to have a court order to get it. And so that doesn't help the situation. So I think FinCEN, if that were going to happen, is it's not the best case scenario, but it could be a good case scenario.
That is a topic that can go on for a very long time. I think UBO, ultimate beneficial ownership, is a conversation I would say I personally have every week, at least once. Big topic at the moment.
Does anyone remember, just based on that database, Trace Industries after the Panama Papers came out that they said they were going to start that, and also Transparency International started talking about
Yep.
it. I mean, I was part of the board on the IASCI for Bank of America several years back, and we were talking about where the database is. The data is out there. These organizations have to come together. It has to talk about, there's communicating between all these agencies. The data is already there, especially in Europe. So I just remembered like that, and I don't even know what's happened to it. It seems like it's fallen off the radar. And getting to the root of these problems, it seems like a lot of people are saying things, but they're not doing anything. You mentioned a lot about being proactive.
Yes.
Proactive in the financial institutions, especially with fraud, for years, and I ran a global card fraud investigations team. For years, we would meet with all the other banks. We would have phone calls once a month and share bad IPs and share bad, following the money, but you have to share this information. So if there's just a comment I can make, because we were talking about following the money, you have to share information. Banks cannot be closed off. They cannot, I feel like there was a backtrack of working in silos again. And I mean, I'm passionate about why I've been doing this for 15 years, and it's just, I feel that anyone here within your organizations, if you're not sharing data, I think we have to. It's the only way to not only connect and help our law enforcement partners, but it's also to help ourselves, because if it's going to hit one bank, it's going to hit another. We see it cyclical. So that's just a
I think that's really important. The more we can share information, certainly the better. And one of the things that I was a huge advocate for after 9/11 and dealing with the 9/11 Commission was that we needed to get security clearances for people in financial institutions. And you look at the defense industry, everybody's got a security clearance. You come into a financial institution, next to nobody has a security clearance. And we can't share some information that was so wrong. And in fact, I wound up having, I was interviewed numerous times by the 9/11 Commission, and I was pounding them, and they put in the 9/11 Commission report that was a bad idea.
But we had
Yep.
we had a couple of very serious cases working with JTTF. I was with Bank of America, and we had a fight for a few of us because they wanted us to talk to them, and we of course had to get security clearance in order to go there.
See, in that
so for
case,
and that's where I'm wondering what's happening with that.
well,
with the
there's
banks.
still that movement out there, and in my testimony before Congress in January, I brought that up, that we need to go back and revisit that people in financial institutions need that. And this would be a good way to end this, just a funny story on that. Right after 9/11, and we set up the terrorist financing operations, I was getting pounded by the banks. Can you give us some guidance on what we should look for? So we put together, I put a memo together on this is what we learned. This is what you need to look for over here, because it's going to be different than this model, and it's going to be this model. And I made the mistake of sending that memo to the CIA, to my counterpart, because what we did is I sent agents over to the CIA, and we were one of the few areas where there was really good connectivity and to your point, information sharing, and that was back then a big problem, but this was the model for it. So I send the memo over there, hey, can you add anything to this? Because I'm sending this out to all the banks in the United States, and it'll probably go out through through FinCEN to the Egmont Group. And I got my unclassified document back classified. And I called my friend up, or my counterpart at the CIA, what the F did you do? And this is a classified document. Oh, we classify everything.
And they said, and we're giving you an award. Thank you very much.
And he said, yeah, we classify. Why didn't you tell me that before I sent the memo over there? So, you know, it's all cultural too, part of it.
In light of all the discussions that we've had with Bitcoin and all the other currencies and the banking system, what makes you think, Mr. Lormel, that if there is a discussion or there is an open discussion and communication between the law enforcement and the banks, the same banks who are shelling these terrorists and all illegal drug activities and everything else, what makes you think that there will be an honest communication between the two of them and it will put a stop to this?
Well, I'm an optimist, and I honestly believe more than not. I mean, you bring up a good point, and you're still going to have to deal with those impediments and those challenges. But I also, in talking to folks, one of the things I like about this industry is how dedicated people are and how compassionate they are about what they do and what they want to do. So, I mean, you have to take it with a grain of salt. You realize that, yeah, we're going to have to deal with that challenge and get around it, but at the same time, that's not going to stop me. And I hope it wouldn't stop anyone else, and we identify those impediments and the challenges, and you have to deal with it.
No, I agree with you. I just don't agree with the fact. I'm an optimist just like you. But the point is that when you have big banks like Deutsche Bank and HSBC and JP Morgan and everyone like them who are these huge international banks and they deal with billions and trillions of dollars and they're benefiting from these illegal activities, none of them are really going to go out of their way, no matter how good the individuals are in their heart. The institution itself is not going to go out of its way to help the law enforcement cut their money and cut their legs.
Well, what you bring up is a different position here, because on one hand, you've got the compliance mentality or the compliance culture versus the business culture. So, and you see that particularly, and when I go back and I look at the HSBC hearings, that's exactly what you saw. The business people that sat at the table testifying were basically mocking the system. To me, those people should have been in jail. So that to the answer to your question then in that context is put one of those bankers in jail, and then you set a deterrent.
So go ahead, you were in that position. I challenge you to speak to, no, this is a serious conversation.
No, I don't disagree with you.
I challenge you or anyone in your position who can appear before Congress to say those things and, you know, imprison them and make an example out of a few of them, then you won't have that anymore.
Well, if you look around, you see that mindset is, and that comes down to what I call opinion. You know, I look at, you know, when we talk about, and we're getting carried away, but just, so I look at, like, there are 5 elements, I think, that go to change. And the 5th element, in my view, is opinion. And opinion is driven by the media, and by Congress and by us, the public, in terms of what we see. And I've seen it, if you watch, in some of these cases involving the financial institutions and the banks, there are certain judges, and particularly here in Manhattan, in the Southern District of New York, Jed Rakoff being the one in particular, that they take the Department of Justice to task every time they come in with one of these deferred prosecution cases, and he wants to know how come somebody's not coming in to get prosecuted. And you know, not to beat it, but there are so many challenges to bring those cases, because a lot of prosecutors are, one of the problems is the prosecutors don't want to prosecute those cases because they're going to be going against the best lawyers money can buy, and that's a whole nother dimension to the story. But, I mean, that's a good argument. But so the answer is, until somebody in a prominent position like that goes to jail and you have that deterrent, then you're not going to see that type of change.
Well, you have my vote, whatever it is that you want to do. I'll be one vote.
Right.
My wife said I can't run.
And with that, we will now go to our, do we have one more question, or do we want to?
Heading back to her point, wouldn't the New York DFS 504 solve that issue? DFS 504, the new regulations that somebody has to be in charge of whatever responsibility for a bank?
In my view on that, the only way that would be is if they don't go after the compliance officer, but they go after the board of directors and the CEO. And if that happens, then yes. If it's the compliance officer, then no.
But it's still somebody's going to be going to jail for it, which is the whole idea of the new regulation.
You know, the problem there is if you send the compliance officer to jail, everybody that's a compliance officer is going to leave. And that's not what you want. What you want is the business people who are responsible for the bad activities. Those are the people that need to be held accountable. And think about it, if the CEO and the board is going to be held accountable, you can rest assured that the compliance officer is going to get the resources the compliance officer needs to do the job.